We're back. I'm your host, BKP, and it's time for Tax Tips with Beth Bennett from H&R Block. How are you, Beth?
I'm good, Brian. How are you today?
I'm good. You know, I've been coming over and saying hello.
I know. I like that. That's a nice change. He goes to the gym, gets a hard workout, and then comes and says hey to me.
Well, you're
my day.
You're over there at Hillcrest. Is it Hillcrest?
Highlands.
Highlands Crossings.
Mm-hmm.
Okay, Highlands Crossing. I get my, Highlands Crossing Shopping Center. You're over there at Highlands Crossing Shopping Center.
Right.
And so I stop by and say hello, but that's not your only location here locally.
No,
How many locations do you have?
We have two more. We have one on River Street and one on Craig Street between Pools Barbecue and the drugstore.
Beth, last time you were here, the tax reform bill had just passed.
Right.
Okay. And the great thing about our first segment that we did together was H&R Block really did a lot of great, put out good information for you and your staff to get the best understanding of what the tax reform bill meant here and there and everywhere. But since then, there's a lot more that's come out that we know now that we didn't know then, just in the last 30 days since Christmas. What are some of the things that you're starting to see now that we didn't talk about before, or some things that our viewers need to know or not misunderstand about the tax reform bill? So
just a little more detail is what we've gotten, and we've sent questions up to our tax institute at H&R Block that just focuses on tax law. So if there's something we're not sure of, we can contact them. And they had to do some research on some of the changes on what they think it's going to look like, because we really don't know any of that 100% sure. But one of the biggest ones, and I've not heard it talked about anywhere, is unreimbursed business expenses. So if you're an employee on a W-2,
unreimbursed business expenses. Okay.
So that was a Schedule A deduction. So if you itemized, you took your mortgage interest and your property taxes and your charitable contributions, right? Those are the most common that people take on there. You could do unreimbursed business expenses. And that affects so many employees. So if you think about it like a salesman, maybe like the beer truck, the Pepsi truck salesman that travel in their job. And the company pays them, but they don't pay them as much as the IRS allows for that deduction. For example, if I'm a salesman and I travel in my vehicle and my company pays me on a W-2, so taxes are withheld, that's who this affects, only if you're paid on a W-2. My company pays me 30 cents per mile. That's pretty good, right? But the IRS allows this year 53.5 cents per mile. So you could take that difference. Adds up a lot if you're a traveling salesman and you spend all your time in a vehicle, right? Like my brother's a salesman. He sells truck warranties. And he leaves his house in Memphis and travels all the way to Knoxville.
Right.
That's huge. A home health care nurse who goes from home to home and provides care.
That's something, yes. Exactly.
That's huge. Truckers probably going to be the worst. A lot of truckers are W-2 employees. They get paid probably I keep using 30 cents because I think that's a common one we see in the office. 30 cents a mile. But a trucker also can take their laundry, their meals, if they stay in a hotel, showers, right? A lot of them stop in convenience stores, truck stops, and have showers. All of that goes away. Like my husband is a lineman, and a couple years ago they sent him to Miami to work, and they were paid $30 a day per diem. However, the per diem in Florida was $55 a day. So we got to take that difference on our tax return. Any tools that he might need to buy. So that covers how many people? Carpenters, plumbers, welders. If you're an employee of a business, you no longer get to take those tools. So it's a really big deal for, you know, at first when we thought about it, we thought of truckers, but then the more we thought about, well, that affects this person. Oh my gosh, it's going to affect them. And there's a lot of people. If you're a salesman, your cell phone, you're spending a lot of time on your phone. You no longer get to take those if you're a W-2 employee.
Folks, whatever your occupation is, and I'm just going to say this, no matter what you're doing today, no matter what you're out there doing, whatever your job is, after the tax reform bill, I recommend you consult a tax professional.
This year
to plan
for next year.
Right. but do it now, because there's two things that, like last year, you and I are sitting in here talking about doing your taxes. We have two things right now that we're trying to stress to our viewers. One, yes, it's time to do your taxes. You're prepared to do the taxes and help them, but it's also, right now is the time. We're just now in February, we got out of January, to plan for next year's taxes, because you do not want to get up to September and say, I wish somebody would have told me that in January because the new tax bill does this and this. Is that correct?
Correct. Like the withholdings went down in your paycheck last week. Everyone should have seen some more money in their paycheck this week, right?
Right.
Okay, so how does that affect you
I have
for
no
next
idea
year?
what that means.
You don't get a paycheck?
I'm a small business owner. I have no knowledge of having a couple extra dollars.
Okay, most of us don't. And I don't know that it's big enough to make, like this huge dent in people's lives, but it could impact your taxes for next year. So that's another reason to go have someone look at it and compare. At H&R Block last week, we were super excited. They put in a comparison. We've always got a 2-year comparison to see how you did this year compared to last year. But this year they just came out into our system, and it's just wonderful. It compares this year and applies next year's tax law, so we can see how it's going to affect you. So you're withholding, taking away the standard deduction, the child tax credit double. There's so many changes, right? So it's helping you plan, so we can look at that and see, hey, next year if you don't make a change here, you're going to owe this because of that. So it's very, very handy.
Well, let me ask you a question. How often do you deal with somebody coming in and saying to you, that's not what they said on TV?
Never.
Huh?
Every day. People, but it depends who you listen to, right? And how the media spins it.
Right, exactly.
It's everybody's interpretation of that, and unfortunately, tax law is interpretational. We could read the same paragraph and come out with it completely different, and so it's everybody's different spin on that, and that's the things I've been trying to bring to light. What's not being talked about in the media. Everyone's talking about the doubling of the standard deduction, but nobody talked about the personal exemptions going away, right? So that's the things I'm trying to make sure that I share with everyone, so that they know and they're prepared for the changes for next year, because it could have some huge impacts on people. We don't want people to come sit at our desk next year and we failed to tell them, hey, if you don't make this change next year, you'll owe this.
So let me ask you a question. If they come to H&R Block and they come to your location, as you're doing their taxes, you see their finances, you are at the same time consulting them and making recommendations for next year. Say, like if you put this in this year and you say, we're putting this in, but we need to let you know what you're doing now, you will not do next year. You're helping people.
Absolutely.
As you do the taxes.
Yes, we are advising them of how these new changes will affect them for next year. But we do that every year. For instance, if you have kids at home and you've got a child that's 16 this year and you're still going to get the child tax credit next year, and the year they turn 17, that goes away. That's a pretty big one, because that's $1,000 at the bottom of the tax return. That's an actual dollar for dollar credit, which is very significant on someone's tax return. And so we always say, hey, next year you're going to lose Johnny. He's no longer going to get you the child tax credit, so you may want to put a little more withholdings on your paycheck to make up for that $1,000 difference.
Well,
that's a lot of what we do. We're not just data entry.
How about, and we want to remind people, the TV made a big deal out of it, and it is a big deal of the healthcare penalty. The insurance mandate penalty. That's still this year.
Yeah, so that's the shared responsibility mandate, that we're all sharing responsibility for everyone's health care, if you want to call it the proper thing, or Obamacare.
You want to get me worked up?
I do. I like you worked up.
I know you didn't just say shared responsibility. Serenity now. Serenity now. Okay.
So the health care penalty, everyone thought it went away this year. It does not, and it doesn't even go away next year. Doesn't go away until your 2019 tax return, so it'll affect you in 2020. So if you didn't have health care in 17 and you don't have it for 18, you will still pay that $695 per person, or up to 2.5% of your household income. So it's still huge. People are still paying that, and they're flabbergasted. They're like, I thought that went away. So people are very upset with that. That's been a huge misconception because nowhere did they say what date. So I haven't ever heard that in the news. Have you?
No.
Just
no.
that it went away.
Yeah, exactly.
It went away.
Exactly.
But it doesn't go away for 2 years.
No, here it is. I show it to you.
Yeah, that's a tough one.
And,
that one's been very...
You become the bearer of bad news, but at least you tell them the truth.
Right.
At least you tell them the truth. What are some of the points that you wanted to make this morning, maybe we haven't covered, or something that you want to make sure you share with the audience?
So last time we talked a little bit about the pass-through income for small businesses, like the sole proprietor.
Pass-through, right.
The S-Corp partnership.
We heard that on TV again, pass-through, and we broke that down last time, what a pass-through is. Basically where, like an LLC, can actually do their tax return like a personal tax return. Is it
right. So the income from the business passes through and gets put onto the personal tax return. So the business doesn't actually pay taxes.
Right.
It goes on the personal, and then whatever tax bracket your personal income, whatever other income you have, it lumps in there and puts you in that tax bracket, and you pay it there. So that thing, and we did a little bit of research into that. So that is a 20% deduction of qualified income for a small business. So let's just say you had $50,000 in net profit on your business, and it's on your K-1. Well, then the K-1 goes on your tax return on the 1040, and at the bottom of the 1040, you're going to get a 20% deduction of that income. So that means on $50,000 net profit, $10,000 is no longer taxed for you. So that's pretty significant. That's pretty significant. One of the things Cindy, who's an amazing tax preparer at my Highland Crossing office, she was all excited about self-employment tax for the Schedule C. I'm like, self-employment tax is separate. That's not an income tax. So you're mixing them, and that's not what it is. Self-employment tax is Social Security and Medicare.
Right.
And nobody else gets a break on that, so why would they?
Right.
This is income tax, so 20% of your net income.
So that's on the pass-through, meaning if you own a small business, you're S-Corp or an LLC?
Well, so LLC's up here, and then it's S-Corp or a partnership or a sole proprietor. So LLC is what your company is, and then those three are how you're taxed. Okay,
got it. So anyhow, so the company that makes the money, if there's $50,000, then that will pass through to the partner's personal tax return.
Correct.
And there's a 20% deduction off of that, and that's pretty significant.
Yeah, that's huge, don't you think?
So let me ask you then, because the way I'm breaking that down then, this actually turns out to be a good thing for small business.
Wonderful. What do you think if I'm in a 25% tax bracket, $10,000, that's $2,500 in taxes you didn't have to pay. Right. So that's a pretty good size, that's a pretty significant credit, don't you think?
I will say this, it's $2,500, and I'm not going to put you on the spot, but I want to talk to you a minute. So let's just say that's $2,500 that you actually are not sending to the government as a small business.
Yeah.
Now let's share with them, as both of us being small business owners, out there the media would lead you to believe that we're just the evil people that just took that $2,500 and just went and partied it away.
Or a beach vacation.
But what do most of us small business owners do? We see $25 that we could reinvest. Don't we always? I mean, isn't that what we do? Put somebody on staff that we wanted to grow, open a new location, buy new cameras, put new equipment in it. Right? Yeah. Isn't that basically what?
Give a raise that you've been holding out on.
But you understand?
Yes.
But they would lead you to believe that, oh my gosh, we just got $2,500 and
but they're so out of touch.
We might enjoy $100 and go to dinner, but for the most part, small business owners,
that's our success.
Right, but we love to reinvest it, don't we?
Yes, yeah. Well, again, that's our success. No, absolutely. That's the success of every business, right? How you reinvest your money into your business and your people in your community, right? And I would beg to differ. Anybody really around us thinks differently. They're not all just greedy and taking it in because there's no benefit to that. Right?
No, because we're in small town USA.
You got to take care of each other.
And you and I attend a lot of things with our local chamber, our Gilmer Chamber, and we attend a lot of things. We go to a lot of things, and we know. Let's step out here. Let's see how I can make this sound. We know a lot of small business owners, and the small business owners that I know we enjoy reinvesting, not being told we have to.
No.
We do it on our own. Reinvest in our businesses, our communities, and things like that on our own without anybody telling us.
Absolutely. Absolutely.
Sorry, I don't want to get sidetracked. It was you that said shared responsibility a minute ago that got all this started.
Who would have thought that would have got you upset?
Yeah, okay. Beth, where are all of your locations?
So, again, we have Highlands Crossing down there by Walmart. We got Craig Street, which is between Pools Barbecue and the drugstore. River Street's in downtown.
And folks out there, just to let you know, Beth Bennett, H&R Block, the 3 locations. If you call, they have business hours, but right now it's tax time. You need to get your taxes done. You have an unusual work schedule. If you will call them, they will work with you. And I know
absolutely
they will work with you. So, hey, if you're running late or you can't do it to a certain time, they will do what they can to work with you. And also, I want to encourage you not only to go get your taxes done at H&R Block with Beth Bennett, but take the time, get the consulting you need for next year, because there's a lot of changes coming your way, and don't get caught, hey, this time next year saying, I wish I would have known, right?
Absolutely. Prepare. Try to prepare.
And you got a phone number, or I can't see across the screen. I don't.
You can't read it no more?
Is there a number?
Oh, Brian.
I can't see across the screen.
So our phone number is 706-635-5538 or 635-5563 or 636-1099. And we're also sponsoring the Chamber lunch tomorrow, speaking of the Chamber. So come see us at lunch tomorrow at the Chamber. We'll be at the Piedmont Community Center. Talk some taxes again.
I don't have my glasses. I can't see across the room. So there you go. Maybe I'll find my glasses in the next segment. Tax tips with Beth Bennett, H&R Block. We're going to take a break and we'll be right back.